Hey, fellow investors, have you ever wondered how to build a rock-solid investment portfolio that can weather any storm? Well, you're in luck, because today we're diving into the world of diversification strategies, the secret sauce to creating a robust investment portfolio that can stand the test of time. Diversification is like having a well-balanced diet for your investments. Just as you wouldn't eat only one type of food, you shouldn't put all your money into a single investment. It's all about spreading your risk and maximizing your potential returns. But how exactly do we go about this? Let's break it down. First things first, let's talk about asset allocation. This is the foundation of any good diversification strategy. It's like choosing the right ingredients for a recipe. You want a mix of different asset classes: stocks, bonds, real estate, and maybe even some alternative investments like commodities or cryptocurrencies. Each of these assets behaves differently in various market conditions, so having a mix can help smooth out the ups and downs. Now, I know what you're thinking, but how do I decide how much to put in each? Well, that's where your personal goals and risk tolerance come into play. If you're young and have a long time horizon, you might be comfortable with a higher allocation to stocks. On the other hand, if you're nearing retirement, you might want to dial back on the risk and increase your bond allocation. It's all about finding the right balance for you. But wait, there's more. Diversification isn't just about different asset classes. Within each asset class, you can diversify even further. Let's take stocks, for example. You don't want to put all your eggs in one basket by investing in just one company or sector. Instead, spread your investments across different industries, company sizes, and even geographical regions. Speaking of geography, let's talk about international diversification. The world is your oyster when it comes to investing. By including international stocks and bonds in your portfolio, you're not only spreading your risk, but also tapping into growth opportunities in other parts of the world. Plus, it's a great way to hedge against currency fluctuations. Now, I know keeping track of all these different investments can seem overwhelming. That's where mutual funds and exchange-traded funds, ETFs, come in handy. These funds allow you to invest in a diversified portfolio with just one purchase. It's like buying a pre-made meal instead of having to cook everything from scratch. Plus, they're often managed by professionals who do the heavy lifting for you. But here's a pro tip: don't go overboard with diversification. There's such a thing as being too diversified. If you spread yourself too thin, you might end up with a portfolio that just mimics the overall market, potentially limiting your returns. The key is to find the right balance between diversification and focus. Let's talk about a strategy that's often overlooked: diversifying across time. This is where dollar-cost averaging comes in. Instead of trying to time the market, which, let's face it, is nearly impossible, you invest a fixed amount regularly, regardless of market conditions. This way, you buy more shares when prices are low and fewer when they're high, potentially lowering your average cost per share over time. Now, diversification isn't a one-and-done deal. Your portfolio needs regular checkups, just like you need regular health checkups. Market conditions change, your personal circumstances evolve, and your portfolio needs to keep up. I recommend reviewing your portfolio at least once a year and rebalancing if necessary. This means selling some of your winners and buying more of your underperformers to maintain your target asset allocation. Let's not forget about diversifying within fixed income investments. Bonds aren't all created equal. You've got government bonds, corporate bonds, municipal bonds, and more. Each comes with its own risk and return profile. A mix of different types of bonds can help protect you against interest rate changes and credit risks. Here's something I've learned from personal experience: don't neglect alternative investments. Things like real estate investment trusts, REITs, commodities, or even peer-to-peer lending can add another layer of diversification to your portfolio. These assets often move differently from traditional stocks and bonds, providing additional protection against market volatility. Now, let's talk about a strategy that's gained popularity in recent years: factor investing. This involves targeting specific drivers of returns like value, momentum, or quality. By diversifying across different factors, you can potentially enhance your returns while managing risk. One aspect of diversification that often gets overlooked is tax diversification. This involves having a mix of taxable, tax-deferred, and tax-free accounts. It gives you flexibility in managing your tax liability in retirement. For example, you might have a traditional IRA, a Roth IRA, and a taxable brokerage account. Remember, diversification isn't about eliminating risk entirely. That's impossible in investing. It's about managing risk and giving yourself the best chance of achieving your financial goals. It's like wearing a seatbelt when you drive. It doesn't guarantee you won't get into an accident, but it significantly improves your chances of coming out okay if you do. Lastly, don't forget to diversify your sources of information. Read books, follow reputable financial websites, listen to podcasts, and maybe even consult with a financial advisor. The more perspectives you have, the better equipped you'll be to make informed investment decisions. In conclusion, diversification is your best friend when it comes to investing. It helps you manage risk, smooth out your returns, and sleep better at night, knowing you're not putting all your eggs in one basket. Remember, it's not about picking the perfect investment. It's about creating a well-rounded portfolio that can withstand whatever the market throws at it. So, fellow investors, are you ready to take your portfolio to the next level with smart diversification strategies? I hope this video has given you some food for thought and actionable ideas to implement in your own investment journey. If you found this helpful, don't forget to like, share, and subscribe for more investing tips and strategies. And hey, hit that notification bell so you never miss an upload. Until next time, happy investing.